Now we're going to talk a little bit about, there's a lot of confusion around the different modes of living that some people move to as they age and how that will affect your taxes. So the first one would be a resident of independent living. So if you rent, say in an independent living, you have no services and you are not a licensed facility, if you meet the income requirements, and we'll get to that on a later slide, you may take your rent as a rent credit on your Michigan property tax form. If you are a resident of an adult care home, such as an assisted living facility, your facility probably pays local property tax. You can claim a portion of that on your Michigan tax return as a property tax credit, just like you would on your home that you're living in as a property tax credit. Again, you have to meet the income requirements, but you find out, and they probably send you a letter saying, this is your portion. Say you have 5% of it, so you get 5% of the taxable value and 5% of the property taxes. They send you a letter at the end of the year, you use that to file your property taxes. You cannot claim your rent, because your rent is an inflated number that includes the services that you have, but you can claim a Michigan property tax credit. There are situations where you're living in an assisted living facility where one member of the party may be considered nursing. There's reasons why that. Generally, it's because a married couple wants to stay together, and that might not always be able to happen in nursing, or it sometimes happens because nursing facilities have waiting lists, whatever the reason. If that person in the assisted care facility meets the requirements of a nursing, that's 5, they usually use a 5 term, whether they need help bathing, dressing, feeding. If they meet those requirements, then we can drop down to the bottom one, even though they're in assisted, and all the things, lodging, meals, and medical care can be considered medical expenses on your Schedule A and considered medical. And most people Schedule A, a lot of people are taking a standard deduction, so they don't often keep track of their medical. But when you start considering the cost of whether it's an assisted living or a nursing home, I mean, your monthly rent is easily $12,000, whatever. You start heading up these costs, they easily will cover more than your standard deduction. So you're now in the situation where you're itemizing. So if you're in a nursing facility or a long-term care facility, and the principal reason for being there is medical care, you can take the cost of lodging, meals, and all medical care, and I mean all medical care, including all your supplies. It goes on as a medical expense. And the same with if you're in assisted living care. So these are the 3 different modes of living and how you would treat those.